Hello, welcome to this Sunday live stream. Prez, can you give us our topic of the day, please?
Today, I just want to briefly go over 5 companies that I have currently on my watch list. And if I were to add them to my portfolio, where would I put them as far as my pyramid strategy is concerned? What level would I put them on?
Okay, let's see. Um, can you see and hear us, guys? Are we live? Is everything working okay? Can somebody give me a thumbs up and let me know? Or write something in the chat? Does it, I don't see any comments coming in. Okay, here goes D. Thanks, D. D put in the comments. I guess we are live. All right,
Yeah,
so let's get started. So, you have a lot of, well, you shared a few things with me that you wanted to discuss. Let's start with Palantir. Is that good?
sure.
All right.
Okay, so Palantir is basically, to put it in simple terms, a super smart detective for data analytics to be exact. They help government agencies and large corporations make sense of all the data they have, helping them solve problems faster. Over the last 3 quarters, Palantir has beat earnings, revenue, and earnings per share. Their current PO ratio is 20.76 compared to the industry PE ratio, which is 9.63. So, in my opinion, Palantir is a bit overvalued. So, I would rank Palantir, if I were to hold it long term, on level 5 of my pyramid with a 1% allocation.
Okay. So why are you ready to um, bring Palantir into your portfolio as a long-term hold?
Simply
Or
because they're venturing off into the artificial intelligence space, and I have a very innovative mindset.
Mhm.
So I kind of want to be early if they do end up being a great company, like a level 3 portfolio type of company. I just want to be a little early. That's why I'm putting it on level 5. One, I said again that I do feel that they are a bit overvalued, and not to try to pump Palantir stock up or anything like that, but it would be a 1% allocation in my portfolio if I were to add it to my portfolio.
all right. So still in that along with that AI technology. I know this past week someone brung up Intel on your live and another one on your radar potentially to get one of those smaller allocations. I think is AMD.
Yes.
So what do you think about these companies? Are you're eyeing them because they're a little bit behind with the AI technology, and you think that once they catch up, they can be kind of a competitor with NVIDIA, or what are your thoughts around um, where you think that they can go?
Well, as far as Palantir, they're into more so data analytics, and they're helping, like I said, the government agencies and large corporations make sense of all of the data. And I don't see any other companies that are currently in that space that are dominating that market share. So that's my main reason, rhyming reason as to why I'm even considering looking into Palantir. And it's a very young company as far as being publicly traded. So that's another reason. So they say you always want to get in early when into investments, but I don't want to over allocate myself into this investment because they're practically new and they don't have a proven track record just yet. So that's why I'm allocating 1% of my portfolio to Palantir if I decide to even buy into Palantir, start investing in the Palantir. And I'm also prepared for the downturn as far as the share price is concerned because it is overvalued as far as the PE ratio is concerned.
All right. So is this a position that will be in your YouTube portfolio that you share with us as well as in your personal portfolio, your IRA? Will you be doing it in multiple?
Not my IRA, but potentially the YouTube portfolio. It is on the watch list for the YouTube portfolio, and my main taxable account as well. I have my eyes on it. I haven't bought into it yet. I've owned it previously and as a trade, and I'm sort of liking where the company is going as far as their business model and ideas are concerned. They just have to prove themselves financially for me to be a full-on investor in them as far as moving them further down on my portfolio, my pyramid.
Okay. Okay. So what about AMD? What are your thoughts on that?
AMD, for those who don't know, AMD makes computer chips that power computers and graphics cards that makes images look good on screens. They also create combined chips for both computing and graphics tasks. Their products are used in gaming consoles, personal computers, and data centers. They compete with Intel in making computer processors and NVIDIA in making graphics cards. Now, as far as Palantir, as far as their earnings, they beat revenue 4 consecutive times, but they missed earnings per share December 23 of 2023 by 0.01%. They have a PE ratio of 238.36 compared to the industry PE ratio of 46.84. So in my opinion, this is not a suggestion for you to buy, hold, or sell, but AMD is also overvalued. So if I were to invest into AMD, it would be on level 5 of my pyramid as well with a 1% allocation until they're able to prove themselves that their financials can match up with their products and services that they're putting out. And the same goes for, like, I'm looking at Palantir. I want to be early into some of these riskier and investments. That's why I'm allocating such a small amount of my portfolio to them, simply because I want to beat the crowd.
Mhm. So as far as adding them to your portfolio, are you looking for certain price points to focus on them? Are you staying strict to your like schedule of when you invest? Like kind
I'm
of
just
just
saying, I'm staying strict to my schedule as to when I invest. The actual entry price point, that's not very important to me right now because it's going to have such a small allocation. So I'm prepared for larger pullbacks. If that were to happen, I'm prepared for that because it's such a small percentage of my portfolio. I don't mind looking at it as being down 30%. You understand, like that? As long as they don't change their business model as to why I started looking at them in the first place. Now, I could be wrong on these investments. That's why I say it's very important to be properly allocated into ETFs and your blue chip companies before you even consider looking at companies like these. So, with that being said, that's why I'm ranking AMD as far as where I will hold it in my portfolio.
Mhm, mhm, mhm. I didn't look it up, but do you know offhand of any ETFs that give exposure to the first two things that we talked about so far, Palantir and AMD?
Not right off the top of my head, but I do believe they are included into VTI. I do believe they are there.
Well,
And as far as ETFs, that's the safest ETF that I can find that I really, really like, and I'm getting the bang for my buck. So as far as these other innovative ETFs like your ARC fund or things like that, I'm really not interested in because of the expense ratio and the risk as far as the top holdings that are in these portfolio that are in these ETFs. Like, I want the blue chips first. I want to have a sound, strong foundation first and foremost before I even start venturing off into these riskier assets. I want to stress that because a lot of people will hear about these names and they're fast moving stocks, and some of the share prices are low enough to where as though you can buy multiple shares looking for a fast or substantially larger return than your Apple or your Microsoft or something like that. But it's much safer to invest into these blue chip companies. Start with an ETF, a good sound ETF first, and then venture off into the blue chip companies first before you start venturing off into these riskier assets. Because at the end of the day, a lot of these companies that I'm naming today are not profitable or haven't proven that they can be profitable for years on end.
okay, Prez, you're being super nice with the way I asked that question because it was, of course, the total U.S. Stock market, it's going to be in there, but I have no idea like what percentage allocation,
Right.
where it falls in the list. Like there's certain companies. Obviously, we pretty much could probably name the top 10 or top 12, but
Mhm.
I don't know how much exposure you get to. The ones that we mentioned here when you invest into an ETF. Not that it matters because that ETF is going to adjust and change as the company sizes, uh, ch- as the companies grow and change, it will automatically change for you. So at least in VTI, I know for sure it will. But all ETFs are going to be managed and updated in those type of ways for you. So you're getting exposure to what
Right.
the fund managers think are the best companies or that have the highest market cap. All right. So now on to some other type of companies. Well, let's stick with SoFi. You have SoFi on here, and that's kind of in the same type of realm. Why is SoFi on your radar?
One, I really like the business model as far as their products and services are concerned. Not only do you have your traditional checking and savings, and they have a nice high yield savings account when you connect your direct deposit, of course. If you don't have the direct deposit, you're just getting like 1.5% interest on your savings, which is still better than a lot of traditional banks. Also, you can invest into stocks and you can trade options there, and you can open up a Roth IRA with them. They have all types of loan services, student loans. They have a credit card, and I believe that they have the potential to beat out a lot of customer base as far as these traditional banks are concerned because of the products and services that they do provide.
All right. So all of these companies that you're thinking about will all be on your lowest allocation.
So far, yes.
So far, yeah. So, guys, personally, I'm not planning on adding any of these companies to my portfolio. My newest addition has been Microsoft. And what else? This year, I would say I've added Microsoft this year. I've added SCHD and Meta. So I'm not in the place right now where I'm ready to add anything new, even if it is on a very low allocation in my portfolio. So Procter and Gamble, are you ready to move on to the next?
Um, yeah, we could hold on before we go. Let me just let the chat know about SoFi's earnings.
Okay.
They have beat earnings 4 consecutive times, revenue and earnings per share. They have a negative PE ratio of negative 25.10 compared to the industry PE ratio of 23.63. So as far as financially, SoFi has a lot of catching up to do. That's why another reason why they would be on level 5 with a 1% allocation in my portfolio if I do decide to add it to my portfolio. And I say all of these things because I don't want anyone to hear these stock company names and they just go all in because they think it's going to be the next big thing. You understand what I'm saying? And then they're down 60% in their portfolio because they over leverage themselves into these riskier assets. I can't stress that enough.
And we already touched on, investing into an ETF. Now you are an investor that pays attention to the news catalysts, everything that's going on. And you're using the word over leveraged. Can you talk a little bit more about that for a more beginner investor um, aspect to give them an idea of are you going to be using a stop loss on these newer investments, or are you just know that the type of investor that you are and you're going to be keeping an eye on it?
I will not be using the stop loss on these investments simply because they are medium to longer term investments. And I already understand that there could be some slight pullback or major pullback in these companies because of their financial history, but I'm prepared to weather that storm. That's why it has such a small allocation. That's what I mean by being over leveraged. It's only 1%. Each one of these companies are only 1% of my portfolio. So if the company
Mhm.
was to fold, I really won't take too much of a hit because I was smart enough not to put too much money into these companies, knowing they have not yet proven themselves to be legacy type of companies. That's what I
Mhm.
mean by being over leveraged. I would like to over leverage myself into a good sound ETF first before I even start exposing myself to any individual company, whether it be Apple, Microsoft, Tesla, Nvidia. Majority of my money is going into VTI first, at least 60% or more.
All right. So, Prez, I have talked about this. I know you've probably been watching my videos along, over the last few months, so you know the struggle that I've had with Disney and Target. They were
Right.
in the red for months. So you're basically saying how would you feel, or you're looking at this the way I was looking at it when my both my Disney's still in the red, but
Mhm.
Target is no longer. So, but at the same time, when I was going through that phase when both of them were severely down, it didn't really bother me because my portfolio was being held up by the VTI and Google and Apple and Amazon and those type of things. Is that the way that you're looking at the situation of adding these companies that you're not 100% sure of their long-term fundamentals?
Yes, like I said before, I'm basically prepared. I already know before I invest into them where they are financially. But like I said, I have a very innovative mindset, and I also want to be early into some of these companies in case they do end up proving themselves over a period of time. Now, as far as the share depreciation is concerned, I'm already prepared for that. As long as they don't change any of the reasons why I even started looking at them, then I feel as though I'll be okay. Now, if they were to go under, then I have a very small amount of my portfolio allocated there. So you can't win them all. No one is the perfect stock picker at the end of the day, not the news media, not the so-called stock gurus, not the analysts. You take everything, all of this with a grain of salt, and you pretty much need to learn how to do your own research and make your own better judgment on as far as where you're investing your money.
Yeah, I definitely would like to do at least one or two investments that we sit down and go through in more detail, point by point, with, like you're saying, the PE ratio and more detail to show the investors that are just starting out on how they can start if they want to add these individual stocks. So they're not just hearing, whatever name and saying, like you said, just
Mhm.
jumping in. Um, so next up is Procter and Gamble, another one that you've been wanting to add to your portfolio. How are they currently doing?
Okay, well, as far as Procter and Gamble, they've beat earnings per share 4 consecutive times, but they missed revenue the last 2 quarters. Their PE ratio is 27.39 compared to the industry PE ratio for their sector is at 26.12. Now, as far as Procter and Gamble, they do pay a dividend. I didn't write down as far as the actual dividend payment is concerned, but Procter and Gamble, I would put that actually on level 3 or 4 simply because they've been around and they're into consumer products and things of that nature. I just didn't add it to the YouTube portfolio. But if I were to start a brand new portfolio, where would I put Procter and Gamble? I just want to give the viewers out there one of the more tried and true companies that's out there, more of a blue chip type of company that they can consider maybe looking into to add to their portfolio. And Procter and Gamble is definitely a good, strong investment in my opinion. In my opinion.
Mhm, mhm. So their dividend yield is 2.4%. And Procter and Gamble it's an essentials company that I have all over my house with, Bounty paper towels and shampoo and Crest toothpaste. So it is a favorite product line of mine, but also not on my radar as to something that I want to add to my portfolio. I think I am like most people, and just like what is at the top of or the Mag 7 is kind of where I've gravitated towards in my individual investments. Um, Outside of the random ones, like I mentioned, the Target and the Disney, it's pretty much for me been those companies that I've invested into as the individual stocks. Besides, but I also did way back when dabble into, those things that I thought would be profitable, the charge point and things that I thought would tie to uh, advancements in technology and things that were going to be thriving, but
Mhm.
didn't quite work out. Um, so I think we've touched on everything that you were looking at adding to your portfolio.
Yes. It's the
All
reason
right.
why I chose Procter and Gamble, because there's a saying out there that you want to own the companies that you consume. And because I'm sure a lot of us that are in this chat that are going to end up watching this video, the replay, or that are watching us live right now, 9 times out of 10, you're using Procter and Gamble products. And a lot of people also ask me, like, what companies should I be looking into? Um, I like to be a very diversified type of investor. I gravitate more towards the tech sector, but I don't want to be all tech at the end of the day. I want to
Mhm.
have some sort of diversification into other sectors. And Procter Gamble is just an alternative that I can throw out there for someone to maybe look into. Put it on your radar, put it on your watch list. I'm not telling you to buy it. I'm not telling you I'm buying it tomorrow, because I probably won't. But it is indeed on my watch list for a future investment. And these are the reasons why.
All right. Let's take a look at the chat. Oh, also, thanks for sharing the earnings calendar for the upcoming week.
No problem.
Uh, NVIDIA earnings are coming on Wednesday. I think that's the biggest name of this week, or the most anticipated.
Yes.
But we also have Palo Alto,
Mhm.
Zoom, Lowe's, and a few big names coming up this
Ralph
week. But
Lauren. I'm really keeping my eye on Ralph Lauren because I actually own it, and I own it because I wear it. It's like one of my favorite pieces of cloth to put on my body. So why not own it if I'm wearing it?
And I like the calendar. I don't like having to go to different places, different sources for my information, but that earnings calendar, from where is it from
It's
that you
from
shared?
Earnings Whisperers.
Earnings Whisper. Yeah, I think
You can
it's
find them on the X platform. All you have to do is type in Earnings Whispers and follow their page. And if you want the up to date earnings calendar, all you have to do is go to where it says media and click on that, and they'll show you. Sometimes you'll see like a chart or something like that, because they do more than just put out their earnings calendar. They put out like different charts and their predictions and things like that. Take all of that with a grain of salt, but you can find great value in just the earnings calendar alone.
Yeah, I think I like that it's structured better, where I don't have to hunt for certain companies. I think they have them at the top of the list, because
Hmm.
there could be 100 companies having earnings on the in within this week on different days, but you want to,
Right.
it kind of prioritizes it better.
They put the
So
most anticipated earnings up.
yeah, I think I missed one thing that you had on your watch list, which was Netflix.
Netflix, yes.
Yes, yes, I skipped that one, sorry. So I know with Netflix, after their last earnings report, they also shared that they were going to stop sharing their subscriber count and certain information. And even though their results were good, some of that information that they're not going to share going forward did not resonate well with the shareholders. So let me know your thoughts on Netflix, and have you already started investing into it? Do you have a Netflix position already?
No, I don't have a Netflix position at all. Um, Simply because Netflix is Netflix. You understand what I'm saying? I'm noticing that a lot of people are streaming more versus actually going out to the movies the old school way. I mean, there's nothing wrong with going to the movies, but if you really look at the statistics, a lot of more people are streaming now than actually going out, because of crime, and concession prices are through the roof. You go to see a movie, you got to take an extra $20 just for a candy bar and popcorn and a soda. You understand what I'm saying? When you can do all of that in the comfort of your own home, in my opinion, you can get a nice size TV, you can get recliners and put them in your home and have your own home theater. You understand? Surround sound and things of that nature. So if Netflix are leading the market share as far as streaming is concerned, or one of the leaders as far as streaming is concerned, yeah, I would sometime down the road like to have some exposure to that. Why not make some money off of them if they making money too?
Mhm. Yeah, I was just looking at an article on the Motley Fool, and it said back in 2004, a 1,000 investment into Netflix would now be nearly $335,000. So
They always
yes.
say that. Now, as far as that 1,000, that headline alone, if you were to put $1,000, I would not recommend anyone to just start off putting $1,000 into one said company. start off with small amounts. Start with your ETF first and work your way up your pyramid. You understand? That way you won't be over leveraged in this company if it doesn't go the way you plan for it to go. And say you would have put that $1,000 all at one time in the Netflix and it went the other way, it's down 30% year to date. You understand what I'm saying? You would have been kicking yourself like, I can't believe I listened to this article or I listened to this YouTube or I did this, I did that. Don't over leverage yourself. Think logically here and go the more safer route first. You're just starting out 9 times out of 10, especially if you're just starting out. Start off with a good sound ETF first. Not a suggestion for you to buy, hold, or sell, but don't look for the quick flip or the fast money. This is a marathon at the end of the day. It's not a sprint. The last thing I want to do is hear about you saying, well, I listened to this YouTuber and I bought Palantir and it's down 30% year to day and I don't know what I should do. What you should have done from day one is look at VTI, VOO, something with a low expense ratio. It pays you a quarterly dividend. You already have exposure to Netflix. You already have exposure to Palantir. It's already all inside of that same basket. Now, once you gain the knowledge to actually go and learn how to evaluate an individual company, that's when I say you should start looking into some of these individual companies so that you can get direct exposure into some of these companies.
And what's the current share price of Netflix? Let's see. So Netflix is $621.10. But as we always say, we don't let the share price hold us back. We dollar cost average many of the platforms that we use. You can invest as little as $5. Right,
Right.
Prez?
Right. Now, I must add that Netflix is, in my opinion, slightly overvalued. They have a PE ratio of 43.04 compared to the industry PE ratio of 39.91. Now, where would I allocate Netflix as far as in my portfolio? I would probably put it on level 4, maybe level 3, but I'm leaning more towards level 4 simply because of their PE ratio. And in my opinion, they're slightly overvalued right now. So if you were to start dollar cost averaging into Netflix, expect some pullback. Like, don't wait for it to fall down to $500, $400 and be like, maybe I should have waited. Expect some pullback. That's if you want to jump into it now, but not a suggestion for you to buy, hold, or sell. I'm not trying to pump Netflix either, but I do have it on my radar.
All right. So besides VCI, what is kind of like the second highest position in your YouTube portfolio that you share with us weekly?
As of right now, it's 4 companies. I have Microsoft, Apple, Nvidia, and Tesla.
Okay, so those are all equal
They're
below
all equal allocation
VCI.
at 5% each. So if you would combine them together, that's 20% of my portfolio.
And what's the percentage for VCI?
VTI is at 60%.
60. Okay. All right. Just wanted to share that as a structure. I mean, everyone is going to do what they want, but both Prez and I have found that we are finding more stability and probably security in having a strong foundation in an ETF that gives exposure to the total U.S. stock market as well as the S&P 500.
Right. I'm a very strong advocate for learning how to properly allocate your portfolio because the last thing I want is for anyone to be in my comment section saying, yo, Prez, I'm down. My portfolio is down 30%. My portfolio is down 90%. What should I do? It should never, your portfolio should never, your long-term portfolio should never be down that much, ever, 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 ever. Not even in a bear market, it still should not be down that much. Maybe 10% at the most in a bear market if you're properly allocated into a good sound ETF first and foremost, and then start looking to allocate your funds into individual companies.
Okay. So what are your favorite resources that you like to read articles from or do your research, Press?
I
Mm,
have many different ones because I don't
mm.
use just one source. I use Yahoo Finance. That's one. I don't really. I saw Motley Fool in the chat. I don't look at them at all. They're very inconsistent in my opinion,
Mm.
and I think they're
Well,
like
you agree with Michael.
yeah. I don't look at Motley Fool at all. Sometimes
Yes.
I'll look at the
Good.
headline and then I'll skim through the article to see if they know what they're talking about as far as the article is concerned. A lot of these news sites, they pump and dump these stocks to these companies too. They'll pump and dump some of these higher risk assets as well as your financial YouTubers are concerned. And that's the last thing that I want to be labeled as or anything like that. Like that's not me. You understand? I am a strong advocate for properly allocating. I'm going to say it a million times until it sticks in my viewers' heads. I'm a strong advocate for properly allocating your portfolio into a good sound ETF first and foremost. 60% of my money is going into VTI. Then I start looking at other companies simply because we don't know what's going to happen tomorrow with any of these individual companies.
And, year by year, things are gonna change. The overall average return of the US stock market is 10%. But, last year, 2023, we were over 27%, and since about a year ago, we're up 32%. We're up over 12%, I think, on just this year alone. So we have to take an opportunity. We can't let these opportunities to get started with investing pass us by, or think that we need to chase the potential growth and percentages that you're gonna get from the individual stocks,
Right.
because it may not last. You might be up significantly in that individual stock, but, if you're gonna be holding it long term, 5 years, 7 years, we don't know what may happen down the road. So I agree with Prez, and, I'm seeing that those, my S&P 500, total stock market, those type of investments, other ETFs really are pretty stable, pay a quarterly dividend, or even some of I have one ETF that pays a monthly dividend. So it's working for me in my portfolio, and even on a smaller scale, my daughter's portfolio is just 5 positions, and besides Tesla, which is a 5% allocation for her, everything is doing very strong, over a 20% return. Um, so on your, portfolio update from this week, do you know overall what is your percentage growth for the entire portfolio, Prez?
As far as at the end of week 17,
Yes.
let me look real quick. I can tell you in 1 second.
And thank you to, Gary and Trending, and who else? And Jay Jordan for sharing out the live. And thanks for everyone who's tuning in right now. Let's take a look at the chat to see if there's any questions before.
So far this year, at the end of 17 weeks, my total reach YouTube portfolio was up 4.84%. And
Okay.
this was started in January, mid to late January.
Okay, so we have a few things maybe we could jot down for next time around. BNED in the chat. I saw someone else mention something. I think I lost it. I don't know if it was going to be something that's an IPO, but I can't find it.
Oh
All
no,
right.
I do not do IPOs.
It mentioned a date in there, so I wasn't sure if
You
they were
don't
referring
know.
to something. Hmm?
You just don't know as far as IPOs, as far as their financials and things of that nature. And a lot of IPOs, even if the company have a good business model, you'll see the share price skyrocket, and then you'll see it tank, and then it'll tank for months on end. And I don't want anyone to end up getting caught up in the hype of a IPO or anything of that nature. I'm looking for because I did see something on here, a new stock IPO.
Your audio is breaking up a little bit, but I highlighted a comment here by Daryl. He said he switched his strategy, and he is DCing into VCI, one of our favorite investments.
That's
Anything else you see
awesome.
in the chat?
I saw something of the nature of RETIK. I never heard of that. He said something about it's an IPO coming up. But
Okay,
again, I
that must have
don't
been the one that
do
I was looking
IPOs
for.
at all.
Mhm.
I allow the company to go public, and I monitor it from that point on. It haven't really been any companies that has recently IPO'd that I was even interested in putting on my radar, other than Coinbase, but that was years ago, and I'm not no longer interested in owning Coinbase.
So, Prez, how do you stay focused on long-term investing, and how do you set your goals of how you want to continue to build out your portfolio?
I simply learn from the mistakes of others in this space, whether it be someone in the comments, whether it be the actual one that's presenting the content on YouTube, for that matter. Um, I look at what the analysts are doing in their track record. There's a lot of different things that I really look at to keep me motivated on the path that I'm on, because I've been down that road of being over leveraged into riskier assets and it don't feel good. And the last thing I want to do is give up on my journey, because I've already seen from others that generational wealth is obtainable if you do the things the right way and don't try to rush it. You got to have patience first and foremost, and you have to learn how to educate yourself, because everyone is new and they're going to be listening to this person and that person. But you also have to learn how to educate yourself. Now, another site that I use other than Yahoo Finance is I use Trading Economics. That keeps me up to date as to for all of the upcoming economic data, as far as what the Federal Reserve is going to do with interest rates and things of that nature, the CPI data and things of that nature. Because once you get into the investor space, you want to know what's going on with the economy so you can have a full understanding as to how you should navigate your financial journey, as to what you should invest into, when is the time to buy this particular sector or that sector. You want to be in tune with all of that. What's another one that I use? I use the Moo Moo, the tools that are available on Moo Moo as far as the analyst ratings and things of that nature. They make it easy for me to compare the PE ratio to the actual industry PE ratio, what it should be,
Yeah.
and I can determine if the company is overvalued or not before I even start venturing off into trying to read the balance sheet and things of that nature, which I'm still learning how to do, by the way. I'm not an expert at it just yet, but I am learning how to read a company's balance sheet. I can just glance and be like, oh yeah, this company is overvalued or it's undervalued. I think it's a good buy right now.
Yeah, I agree with you on that. The way that the Moo Moo app shows the PE ratio with the two lines right above each other, very clear, crystal clear to take a look at, if that's an analytic that you want to use to weigh your investment choice. And yeah, I like the heat map and the earnings calendar, the dividend calendar, lots of different resources right there in that one app. So thanks
Hmm.
for sharing your thought process on that, Prez. So, overcoming common barriers. I don't think that there are any barriers to investing and setting yourself up in a better position for making your money work for you anymore. I really don't. I have no idea what it took to go and invest back in, say, the late 80s, because I wasn't in the place to do it at that time. But right now, I think that everyone can be investing. So, do you think that there's still any intimidation and fear um, around investing from people that haven't gotten started yet?
Yes, yes. Because I still get a lot of excuses. Well, I'll start once I get this taken care of. I understand you have your own personal financial situations that you would like to deal with as far as getting out of debt and things of that nature, but don't keep putting investing off. You understand what I'm saying? yeah, go ahead and pay your debt down, like you said you was gonna do. I'm an advocate for being debt free. Yes, pay your debt down, but also try your best to allocate some funds to start your investing journey, because you're paying all of that money to who, and then you pay it all off, and you still have nothing invested yet.
Mm.
So I say it's okay to possibly do both. I do both. I'm not debt free. I'm not going to sit up here and say, Prez is debt free. No, I'm not. But I will allocate more of my funds to my long term investing before I start paying debts off. That's just me. That's just my personal thought process to how I move with my money.
All right. So I think a theme with us is we always like to share that, don't let anything hold you back. Dollar cost averaging is a way to get started. You don't have to have a lot of money, but I also want to continue to share that I think in 2024, there is no barrier that should be holding you back from investing, whether it's you want to go with a big broker like Fidelity, first get started with focusing on your retirement. That's where I started off, working and just contributing to my 401k. Or from there, I think that's the most important to me, is my retirement. After that, I've started accounts that are focused on early retirement, and I've started accounts for my daughter, including investment accounts and not just savings account, investment accounts for her, because your money, it has the opportunity to grow in such a different way from being invested versus savings, especially if your savings at your local bank, it's basically not doing anything at all. So I want everyone to know and continue to not be held back or think that they can't do it, because we all can. And even if it is 100% into a basic ETF that gives you broad exposure, it's not hard. So anything else you want to cover today, Prez?
Um, I just want to let everyone know that, well, not let everyone know. I just want to say to everyone, don't chase these hype companies. Don't chase don't try to get this quick buck. Um, a lot more people are going to end up losing money chasing these hype stocks, as far as your AMC. Yeah, I said it. Your AMC and your GameStop, things of that nature. You just heard about it on the news, and already it's down 20-30% from the time you heard about it on the news. Never mind with these video captions of reading and things of that nature. If you're not prepared to hold on to these companies and look at it be down 60, 70, 80%, don't go take out a loan. Don't put your retirement money into this trying to make a quick flip, because you're going to end up getting smoked, and it's not going to feel good. And you're going to be blaming the person who put that headline into your head, as far as this stock is going to the moon. Stay away from them. You're better off investing into a good sound ETF first.
Okay.
I just had to get that off my chest, because I'm saying it a lot already. It's starting to be a repeat from the last cycle. Just when I came on here and said a few weeks ago, I feel as though retail is getting smarter. Nah, retail done proved me wrong and made me look like a fool on here on YouTube, because they're still over leveraging into these hype stocks, trying to make a quick buck. Yeah, you can make a quick buck if you really, really know what you're doing. You got to get in early and get out early. But if you don't have that experience, and you know you don't have that experience, it's best to just stay away from it.
Yeah, if you're not tracking this constantly and able to know read the volume indicators and see when things are going up, I'm going to show one example. So this was FIE on the five. This is FFIE on the 5-day chart. So just last week, this is Faraday Future. So don't feel like when we talk about long-term investing, this would be a trade. This would be spectacular if you were able to know that at the beginning of the week, it was going to be in the 60 cents range, and on May 17th, it was going to be $4. But this is a trade. Lots of people, if you were people that were able to catch this before it drops back down to $1, that were able to ride it up to $4. This is a rare thing. This is what Prez is saying. Most people, if you got in at the wrong time and didn't get back out quickly enough, you're going to lose money. But
Yeah.
a lot of what we share and sharing our portfolios, it is just being consistent, steadily investing for the long term. We do both trade and options trade, regular trades and options trading, but we do it in the most responsible way. We're not out here gambling. Do you want to touch on any trades or options that you've done lately, Prez?
And I do trade. Yes, I do trade as well. But if you were in my live stream during the week, I said I'm not touching it.
Mhm.
Now, I did. I made a very small game, but I got in and out real quick. But I didn't tell anybody what I did until after I did it, because the last thing I wanted to do was to have someone use what I'm saying as influence for them to be okay to, oh, let me try to make a quick flip real quick. I
Mhm.
can double my 401k real quick. No, I said over and over, I'm not touching it. I'm not touching it. I'm not touching it. As far as my trading is concerned, I'm better off. I can make better returns trading option contracts on the spot and QQQ. Is why it's an ETF. It moves pretty quick. It's about the volatility is there where I need it to be, and it's harder to manipulate because it's not an individual company. Now these individual companies that everyone are chasing, these hype plays and these hot stocks they're easily manipulated. They can go up 100% one day and be down 20% the very next day, and you're just buying in. Oh, I'm just gonna buy the dip. But what if it? What are you gonna do when it keeps on dipping?
Mhm, mhm. So basically, GME, GameStop that you've mentioned, same things like the scenario that I just showed you. It was basically Monday to Tuesday, and then we were on the way down to, the end of the week. We're back to basically normal. But we can't let things like this turn us off to investing, because long-term investing and trading are two different things. So just because you're not able to, uh, you know, double, triple your money overnight, we're not here to show you how to do this. Here to show, or I am here to show you my journey, long-term investing, some smaller trades where I can make money and then use that money to put into right back into the long-term investing, the
Right.
basics, my my VTI, my Amazon, those certain blue chip stocks that I've decided to focus on in my portfolio. So,
Another thing I want to add as far as your AMC and your GME, if you notice, as soon as they ran up, both the companies, GameStop and AMC, diluted the shareholders, which means they created more shares out of thin air and they sold them into the market to push the price back down because they're in trouble financially and they're trying to get out of debt. So never mind you, the shareholder, they don't care about you. So you would have bought that when it was $40 just the other day, when it was $40, and you would be down significantly right now. Now, what if you would have bet the house on it, put your 401k in it, your retirement, took out a loan and things of that nature? GameStop is now $20. You already down 50%. Was it worth it? Or were you better off dollar cost averaging into VTI?
mhm. If you are going to dabble into anything, please, I hope no one's taking out a loan to do it, but learn how to use a stop loss is another big thing that I think that we have that has changed our investing strategy and changed our lives, maybe even. So when you get into a trade responsibly, have a plan from the start. With options trading, as soon as that order is filled, we are going in and putting our stop loss on because the decision is already made. I'm willing to lose this dollar amount or this percentage at the most. So investing for me is not gambling. Because with a gamble, I feel like you win or you lose. You lose 100%. I
Mhm.
don't get into any investment with the intention of um, I'm going to lose 100% of my money. I'm making sure that I have a plan in place that's not going to allow for that to happen.
Right.
So, anything else you want to share on that, Press?
I see somebody, Mr. Neo, in the chat. He said, "Do you guys follow Berkshire Hathaway at all?" I follow the performance of it, but I don't own it at all. But I don't see anything wrong with it. I just personally did not choose it to add to my portfolio. But I see nothing wrong with Berkshire Hathaway at all. They have a proven track record as far as financials and things of that nature, and that's Warren Buffett's company. I mean, come on now.
So I had Prez cracking up the other morning because I was talking to Neo on Prez's live stream. Prez goes live Monday, Wednesday, and Friday at 9:15 on his channel. Make sure to follow us both, whichever side you're watching from. I was talking to Neo in Prez's chat, and I just said Neo, not his entire name. Let me just highlight the name so you can see.
I can't
And
pronounce it. That's why I call him
Prez
Neo.
Prez thought that I was asking him to pull up Neo, the car company, on the chart. So Prez is rattling on for a couple of minutes about Neo, and I'm in the chat like, Prez, I'm not at all interested in hearing about Neo stock. And Neo also Stacker was driving to work and just like not even knowing what we're over here giggling about, and he probably hadn't seen my comment in the chat. Maybe if he wouldn't have been able to reply to me, then Prez wouldn't have given me my whole my special. He thought I had it. He was over here like helping me with my special request that I didn't make a
Mhm.
request for. But thank you for that, Prez.
Yeah, that was funny. That was funny.
All right, guys, I'm ready to wrap it up for today. Thanks for tuning in, and we will be back again next Sunday, 3 p.m. Eastern Time. Make sure you can check out.
Oh, he said it's pronounced neophyte. It means beginner.
Okay,
Okay,
thank you for,
neophyte.
for the phonetics
Thanks for
on
clearing
that.
that up for me, Neo. I'm still gonna call you Neo.
But guys, thank you for those who shared out the live. Thanks for tuning in today. Feel free to leave any comments on in the after this is already posted. Once we end the live, leave us any comments on things you might want us to cover in future shows. If you're ready to open up an investment account, our links to the investment platforms that we use are in the description. And check out our videos during the week. I usually put out a few videos per week. Prez puts out a video on Saturday sharing his portfolio specific to YouTube, a special portfolio that he has for YouTube. Anything else you want to share, Prez?
Um, Believe in yourself. That's something that's on my heart to say to everyone. You can do this. It's not hard to learn this. Um, Take your time as far as expecting returns is concerned. Don't rush for fast returns, because as fast as you pray for those fast returns, you can have significant losses that you're not prepared for. Um, that's pretty much it. That's pretty much it. Don't over leverage yourself. Don't chase this. Don't chase the hype just because you can get fast gains. It's a marathon at the end of the day, not a sprint.
Okay. All right. Does anybody have any other questions before we wrap up for today? I'm still looking at the chat. Yeah, we'll have to take a look at this. Somebody's getting ready to buy 1,000 shares on Tuesday.
Be careful. You just stop loss. Um, that's I can't stop you at the end of the day. It's your money. You're gonna do what you want to do. I wouldn't touch it, in my opinion. If it was me, I wouldn't touch it at all, because it's an IPO and they're very heavily manipulated. The ones that got in first, the institutions, they're gonna be the first ones to exit. So it has a potential to come crashing down really fast. So best thing I can tell you is be careful, be sure to use a stop loss, and know what you're already willing to lose before you even get into it. If you're already into it, already have an exit plan determined.
Yes, definitely. I love that about my strategy going forward is that my plan is made, my risk is limited, and I feel like I'm always on track to make money, not lose money. All right. Well, thanks for tuning in, and we will be back next week.